Good morning, Bitcoiners. Hello, and welcome back to another edition of your Bitcoin Economic Calendar. I'm Mauricio Di Bartolomeo, co-founder of Ledn, and as with every Tuesday morning, we bring you the news and analysis you need to start the week off right in Bitcoin. It's hard to believe, but we have reached the last Bitcoin Economic Calendar episode of the year 2021, and what an exciting year it has been for Bitcoin and for us here at Ledn. First off, we want to thank you for being with us through the journey, and we look forward to being with you here throughout the next year, 2022. In today's show, we thought it would be very fun to close out the year 2021 with some predictions for what we can expect in the year 2022. And this is going to encompass Bitcoin and some of the broader crypto trends that we are seeing. In today's episode as well, we're going to cover a big options expiration week, which we have ahead for Bitcoin, over $6 billion worth of options expiring. We're going to talk about how that could impact the markets. And last but not least, we're going to talk about the SEC and its decisions last week to deny and delay some spot Bitcoin ETF applications and how that could play into what we can expect for next year. Grab your coffees, everyone. We're going to say bye to 2021 with a bang. So as usual, we start with Bitcoin. And as Bitcoin wraps up an excellent year, we wanted to spend a minute to celebrate how far we've come and make a few predictions as to where we could be headed next year. Now, although we are not closing the year at a new all-time high in price, as some proponents of Plan B's S2F model had predicted, there are several other all-time highs to celebrate for the Bitcoin network. And we wanted to highlight some of these. This is the S&P chart. To highlight some of the all-time highs for the Bitcoin network that we're closing out the year on, we wanted to provide or show you the chart on your screen right now. So to start, the number of addresses that are holding balances over 1 Bitcoin and over 0.1 Bitcoin are both at all-time highs. As you can see here, there is essentially, this is the list of 0.01 and 0.1, and we're just going to show also the list of addresses that have 0.01 supply, just so that you can see that these are also at all-time highs. So as you can see here, the number of addresses that has a balance over 0.01 is actually over 9 million addresses right now. And the number of addresses that are holding a balance is over 0.1 is over 3.2 million addresses. So this is a huge testament to the organic adoption and uptake that Bitcoin has seen throughout the year. That means that there are now over 12.5 million addresses holding balances above 0.1 and 0.01 BTC, which is very, very, very meaningful. Now, moreover, the daily active address count, which is this squiggly red line that you see here. Here, let's just remove the other ones so that you can see the just the active addresses. So as you can see here, the active addresses, that count is comfortably over 1 million addresses per day, which means that there are now over 1 million Bitcoin addresses transacting every day. For context, we briefly crossed this mark of 1 million active addresses on average on a day in the bull market of 2018, but we have been comfortably above this 1 million mark since basically May of this year. We had a small dip, but we can see that the trend is pretty clear that we're now just transacting above 1 million addresses on a daily basis. So interestingly, these are very, very great signals from an on-chain standpoint. Now, we also had some really great events that happened off-chain for Bitcoin. One of them was the fact that we had the first ever Bitcoin futures ETF hit the market in the United States, and it has become wildly popular. Just checking back at the price chart here. Essentially, Bloomberg ETF analysts project that ETFs will hold over $1 trillion worth of assets over the next 10 years in digital assets. And currently, they hold only $66 billion worth of digital assets. This means that there is a more than 10x increase in the projections that Bloomberg is showing for assets on ETFs, digital assets being held by ETFs over the next 10 years. Now, we're going to get into some of those predictions for our 2022 predictions in our What's Ahead section. But before we close out the section for Bitcoin, we wanted to provide an update on the SEC's decisions regarding spot Bitcoin ETFs. And last week, the SEC quietly rejected 2 spot Bitcoin ETFs applications from Valkyrie and Cryptoin. And these were very recent applications. And again, both of these funds were looking to be spot Bitcoin ETFs. The current accepted and trading ETFs right now are futures-based ETFs. We've talked at length about the difference between the two. But the very interesting signal over here also was the fact that in addition to denying these 2 applications from Valkyrie and Cryptoin, the SEC actually postponed the decisions on the Grayscale and Bitwise spot ETFs. Interestingly, so both of these, the 4 applications are for spot Bitcoin ETFs. 2 of them were rejected and 2 of them were delayed. They were supposed to see a decision in December, but the decision was delayed until February. So interestingly, the GBTC shares, the discount that GBTC shares have to their net asset value of the Bitcoin that the fund holds actually got better on the news. We see here that it went from a discount of 21% to a discount of 15%. So it did tighten up about 5%, which signals that investors are optimistic about the fact that the decision was delayed and not denied. Again, this GBTC, this blue and white line here is for the units of GBTC, which is the fund that is applying to become a spot Bitcoin ETF. The theory here is that once this fund becomes a spot Bitcoin ETF, this discount should go to 0. And so as it becomes more likely that the fund will get approved, we should see this discount narrow and narrow into the blue until basically it gets to par or 0% difference. Now, outside of this set of news, as we discussed in the headlines, there are almost 130,000 Bitcoins worth of option contracts that are expiring this week. That's over $6 billion worth of contracts. And the bulk of these options are call options. And to see some of this open interest, we're going to show you the current breakdown for the expiration that's coming up. So look at this. 129.8 thousand Bitcoins are expiring on New Year's Day. So on December 31st. The big chunk of these, so over 85 or over 90,000 Bitcoins worth of options are call contracts. So these are call contracts that are looking for Bitcoin prices to move higher. And so a large number of these call contracts that are open are above this $56,000 Bitcoin strike price, which means that there will be a lot of pressure to keep the prices from closing the year below that level. And that pressure will come from market makers who obviously want those contracts to expire worthless. Now, if there is a spike up in prices before we close out the week, and the price basically breaches or goes above that $56,000 mark, that could actually act as a catalyst for a short squeeze, as the sellers of those options contracts have to start buying spot Bitcoin to hedge that exposure once Bitcoin crosses that $56,000 mark. So it could act as fuel to the fire if we get into a short squeeze scenario, the fact that we have all these open call contracts outstanding. So we are heading into a thin week of trading volumes. Again, a lot of people are on holidays right now, and thin volumes tend to make moves even more exacerbated or drastic. So there's also a very volatile macro environment on the background and a massive options expiration week on Friday. So volatility should be expected in Bitcoin for this week. So our predictions for Bitcoin in 2022 will be in our What's Ahead section later today. Now, moving on to our analysis of the S&P 500, we see that the year wraps up and the S&P is poised to close one of its best years ever, up 25% year to date. And we're just going to show you this here. This is the week of the 4th of January, and this is where we're at now, 27.67 return for the S&P 500. Quite impressive indeed for a very large U.S. equity index. So what we wanted to do here also was compare the year-to-date performance that we're seeing in the S&P 500 with that of the other US indices. And for that, we wanted to throw in here the NASDAQ, the Dow Jones, the Russell 2000 as well. And as we can see here, the some quite drastic differences between the year-to-date performance of both of them. I believe this is still getting us. This is the fourth week. Okay, perfect. So these lines are showing the exact year-to-date performance of major U.S. indices. So as you can see, other U.S. equity indexes perform very well also, like the Dow Jones and the NASDAQ. So we see here that the NASDAQ actually slightly outperformed the S&P 500 by roughly 40 basis points. Dow Jones is up 17.25% for the year. But the worst performer of the bunch will probably come as no surprise to regular readers of this economic calendar, and that is the Russell 2000, which tracks the shares of small cap stocks in the US market. Now, inflation continues to soar, and it seems that despite the Fed's best efforts to taper their bond purchases, a strengthening dollar, concerns about future economic growth, and the new standing repo facility that the Fed has spun up, we're going to talk about this in the new year, seem to have made the value proposition of treasuries quite appealing in the current environment. So what this means, said differently, is that yields have been slow to rise even after the Fed announced that it was going to aggressively try to increase those yields. This is playing out today, just to show you. We're just going to remove these comparisons here, but just to show you, I mean, the Fed has... last week, the Fed, or 2 weeks ago, the Fed said that it was going to double the pace of their tapering and seize 3 hikes in the new year. And look at what rates have done. They're selling off this morning. The 30 years are, not really moving since the Fed made its announcement. And so, again, it's very interesting to see that there's just a lot of conflicting sort of trends right now. You have the Fed rushing and trying to raise those rates, but you have concerns about future long-term growth of the economy given all these Omicron and the new wave of the virus. And so people are buying these bonds as protection. So again, it's been really interesting to see, and we're going to obviously continue monitoring the yields on these treasury notes as they impact pretty much every other market. So going back to inflation, it continues to soar, and it is expected to continue into the new year. As we just mentioned, the Fed is prepared and expecting this. They're ready and sitting there waiting and ready to do these 3 hikes that they've now said that they were, willing to do if needed. Now, if and when these 3 rate hikes happen, it is likely that there will be a sector rotation away from technology into financials, as banks tend to do better in higher interest rate environments, and technology valuations tend to suffer as their future cash flows have to get discounted at a higher interest rate into the future. Because a lot of their earnings are basically skewed to the future, the discount rate is very impactful for tech companies versus other companies that don't have so much growth skewed to the future end of their curve. So we might see some of this if and when the sort of rate hike does happen. And there's also some concerns that eventually investors will start thinking that stock valuations have become disconnected from the real value that these companies deliver. And for that, we wanted to show a chart essentially of the S&P 500 earnings multiple. So on your screen right now is the S&P price to earnings multiple. And as you can see, it is pretty much at record levels or very high levels. It did hit its peak right there at the 2009, 2008. But at the same time, as these price to earnings multiples are disconnected or at unprecedented levels, there's also been an unprecedented amount of inorganic money that has been injected into the system. So investors are really just trying to find the new equilibrium point between the value that these companies, what these companies should be valued at relative to the cash flows that these companies are bringing in. We could be starting to see some of that or some of this buyer exhaustion or uncertainty play out in the housing market, where prices have continued to soar, but the volumes of sales are trending much lower as way less people can participate at the new price points, which means in layman's terms, a lot of people are getting priced out of new homes. These are the headlines that are coming out on that note, which essentially speaks to the fact that sales of new homes are tanking as affordability is hitting buyers, and the prices are not really budging. They're continuing to rise. Similarly, we're seeing some other concerning signs in the prices of used cars in the United States as they are at historical high levels. Americans are feeling the sticker shock everywhere. So expect a conversation around inflation in Middle America to pick up a lot of steam into the new year. And the probe into turkey prices that happened over the US holidays could be a canary in the coal mine for more animal protein probes ahead in the year 2022. Looking at gold as we wrap up the year, and we may look back at the years 2020 and 2021 and refer to them as the years in which the great transition from gold to Bitcoin started. We wanted to share a very interesting Google Trends graph with you today. And looking here at Google Trends, we see that the trajectory is very clear. Here we see search interest for the word Bitcoin in blue and search interest for the word gold in red. The trends are pretty clear. We've seen now that throughout history, the search interest for Bitcoin has now surpassed the search interest for gold twice. The line doesn't really appear but they actually are overlapping. And what we've seen is that even though it crossed this interest briefly in 2018 during that big market peak, the average rate and average trend of Bitcoin is trending higher. It is now at 25%, and the interest for gold continues to trend lower, and it is now at 50%. So again, for context, gold has been hovering at around 50. It moved a little bit higher throughout the COVID spikes, but it has then basically, you've seen how basically Bitcoin interest spikes a few months after gold, and the trend is starting to become really, really clear. At the current pace, we may see the global search interest for Bitcoin surpass that of gold during the year 2022. And that will be a historic moment. Again, for further context, gold is a $13 trillion market, and Bitcoin's market capitalization is just at $1 trillion. A 10% change in allocation from investors from gold into Bitcoin would more than double Bitcoin's market capitalization and its price. So this is a very important trend that we need to keep our eyes on, and we'll continue to monitor this throughout 2022. Moving over to our DeFi analysis, we see that 2021 was a great year for Ethereum and decentralized finance. Here we're going to compare a bunch of them to Bitcoin's price performance. And so here's Ethereum. Here's Ethereum. Here's Compound. Here's Aave. Uniswap. So in here we can see that and Ethereum, where's Ethereum? Yeah. So if we go back to the first bar of January, sorry, this bar right here, we see that there's been some really interesting price performance to start the year for both Ethereum and essentially a lot of the decentralized finance space. So as you can see here from this line, Ethereum has seen a very great price appreciation for the year. Right now here it looks at like 529, but it actually has been 440% increase for the year so far into 2021. We see that the layer 2 protocols, so Uniswap, Aave, Compound, they all underperformed Ethereum, in fact. So this was a trend that we actually started noticing or highlighting throughout the Bitcoin economic calendar as we kind of saw, as we first noticed this trend earlier or late in the summer, earlier in the fall of this year. And again, very great price appreciation for decentralized finance in Ethereum in general. We see that it actually quite outperformed Bitcoin in terms of annual returns for the year, even though Bitcoin had a phenomenal year of almost doubling throughout the year. Digging deeper into Ethereum adoption and sharing a similar chart than that of the one that we shared for Bitcoin, we see some very similar and interesting numbers here for Ethereum. So the number of addresses holding 0.1 ETH, which is this line here, more than doubled throughout the year. It started the year essentially at around 3.6 or 3.3, and it is basically now at 6.4. So the number of addresses holding 0.1 ETH almost doubled over the course of the year. And that number sits at currently 6.4 million addresses. And that's been fascinating. The number of active addresses for Ethereum is sitting at around 550,000 addresses per day, which is roughly half of that of Bitcoin. However, while the adoption of Ethereum cannot be denied, there was one smart contract protocol that stole the show in 2021. And when we add it to this chart, you'll understand why that's the case. And that is Solana. As you can see, when we add Solana to this chart, it essentially dwarfs every other chart. And that's because Solana increased by more than 10,000% over the course of the year 2021. And that dwarfs Ethereum's 440% return and Bitcoin's 100% return for the year to the tune of 10x or even more. So what could the next year have in store for smart contract protocols? Check out our predictions in our What's Ahead section just in a minute from now after our difficulty commentary. Moving on to our Bitcoin mining difficulty commentary, the most recent difficulty adjustment kicked in on Christmas Day and brought difficulty a touch higher, 32 basis points higher to 24.27 terahashes. We continue to trend close to our all-time highs of 25 terahashes, and we will likely resume the climb in the months of January and then on as large mining infrastructure site development resumes work from the holidays. Checking in on the mempool, things continue to look good. We've started noticing some recent spikes in activity. These are these little spikes that you see here. However, they quickly revert back to normal as transactions are absorbed and processed by the network. So it is a great time to transact on chain if you're going to put in those last satoshis through the chain before the end of the year. And in today's section of What's Ahead for the week, we're actually going to do a bit of a spin on it and going to talk about what we think is ahead for the year and share some of our predictions for the year 2022. So whether it is, before we get going, whether this is your first time reading or watching this show or your 50th time, we thank you so much for joining us on this journey. We look forward to seeing how our predictions play out with you throughout the next year. So without further ado, here it goes. So here are our predictions for 2022 in regards to Bitcoin and later broader crypto markets. So first prediction, the first ever Bitcoin bond issuance by a sovereign state will occur in 2022. And this will happen when El Salvador's Bitcoin City bond offering hits the market. Now, there is a very good chance that the bond auction will be successful, although it may not be fully subscribed for the entire notional term amount. So, prediction number 2. A Bitcoin spot ETF will be approved in the year 2022 in the United States. It will likely be the Grayscale Bitcoin Trust. And while that may not happen in February 2022, which is when we're scheduled to potentially hear the next decision, we may see an approval towards the fall or winter of the year 2022. Now, small chance it gets approved in February, but again, sometime throughout the year 2022. Now, While sovereign bonds offered outside of the traditional rails of financial institutions, like El Salvador, will have limited appetite, that is not the case for US corporate debt related to Bitcoin. And here comes the third prediction. More corporations will announce bond issuance to purchase Bitcoin, similar to MicroStrategy's. We may also see successful bond offerings from large US-based mining companies. This, along with a welcoming regulatory environment and competitive energy costs, leads us to our fourth prediction, which is that North America continues to become the epicenter of the Bitcoin mining industry. The fifth prediction. Bitcoin financial services like loans, savings, and Bitcoin mortgages will continue to grow in popularity globally as individuals realize that it can give them access to better rates and services than their legacy financial service providers can do in their home markets. Prediction number 6. Institutions will continue pouring into Bitcoin, with insurance companies, endowments, and pension funds announcing balance sheet positions throughout the year 2022. Many of these institutions or entities that I just mentioned are critically underfunded and are looking for sensible ways of increasing their potential upside. Prediction number 7. The pressure for upside will continue fueling the great migration from gold to Bitcoin, which is touched on this in our gold section. This is a trend that has been true for 2021, a year when inflation ran rampant. Gold has a year-to-date performance of 4%, when Bitcoin is up 84% on the same time frame or in the same time frame. So this migration, this shift will continue, and more media attention will circulate around this for sure. Lastly, we expect that on and off ramps for Bitcoin in markets outside of the United States will continue to develop to catch up with the variety and quality of consumer choices for financial services that exist in the US. So what this means in layman's terms is that there will be much, much better offerings in the rest of the world to buy and sell Bitcoin, and they will come to essentially rival the quality of the ones that we see in the United States. This is an area of focus for us at Ledn, and a trend that can empower millions of people around the world to join the new digital economy. So expect to hear from us on this front throughout 2022. Now, some predictions outside of Bitcoin. The market capitalization of stablecoins will surpass $500 billion in the year 2022. For context, the entire supply of stablecoins was around $30 billion at the start of 2021, and it is on pace to finish the year at $150 billion. That's 5 times growth in a year. Stablecoins have not grown faster because of regulatory uncertainty. However, this may change in 2022 as some stablecoin issuers obtain banking licenses and or partner with banks for their offerings. This will keep stablecoins growing and could even accelerate the speed of growth into 2022. Prediction outside of Bitcoin number 2. An Ethereum futures-based ETF will be authorized in the United States next year. Given the recent trajectory of institutional demand for Ethereum and the newly approved Ethereum futures and microfutures on the CME, it is only natural for an ETF or futures-based Ethereum ETF to be the next step. The SEC still looks like they need more time to get comfortable with a spot-based ETF like the applications that we're seeing in Bitcoin. However, all the pieces seem to be in place for an Ethereum futures-based ETF next year. Third prediction outside of Bitcoin is that Meta, the company previously known as Facebook, will get into the NFT space in some way. It could be a marketplace enabling artists and creators to mint and sell NFTs for its metaverse. But regardless of the form that it takes, it'll bring a lot of big name brands into the metaverse along with it, all hoping to create a new ecosystem to capitalize on. Service providers will likely try to create big events such as concerts and conferences to draw people to experience the new metaverse. And lastly, our last prediction outside of Bitcoin is that a big video game studio like Activision Blizzard or Electronic Arts will incorporate NFTs into some of their video games. Now, over time, design standards should emerge that make a certain type of NFTs interoperable between similar video games. So that might be something very exciting that we could look forward to, maybe not next year, but the year ahead. But we do expect this to happen much sooner than later. So outside of all of this, Thank you so much for watching us. Thank you so much for following us throughout the year. We've reached the end of the show today. If you have any comments, feedback, or questions, I welcome you to drop it in the comments section below. If you like what you saw today, if you enjoyed the show, I welcome you to thumbs up it, like it, share it, subscribe to our channel, share it with your friends. And if you don't yet have a Ledn account, I welcome you to check out ledn.io and learn how you can start earning up to 9.5% APY on your USDC and up to 6.25% on your first half Bitcoin. We also have the best rates for Bitcoin-backed loans if you need dollars but don't want to sell your stack. Have a wonderful New Year's Eve, everybody. Thank you so much for being with us once again. See you next year. Thank you. Take care.